opposite का it's live. In fact, one person is watching.
Where? You? It's not here. Do I need to subscribe to see?
No.
Then? देखिए यार में
It's live.
but it's showing okay wait okay so settings can they just go to ear okay let me just find
when these guys Prince and Nitish came to Rockure and Bobby came to
Respected ladies and gentlemen, please be upstanding for a dance.
वाहिगुरु जी की फतेह।
श्लोक महला पंचमा।
सभी जी संभाल अपनी मेहर कर अन पानी मुझ पाए दुख दालत बंतर अरदास सुनी दातार होई सिद्ध कर लेहो कंठ लगाए अब दा सब हर नानक नाम ध्याए प्रभ का सफल कर नानक नाम ध्याए प्रभ का सफल कर वाहिगुरु जी का खालसा वाहिगुरु जी की फतेह।
Respected ladies and gentlemen, Vaiguru Ji Ka Khalsa, Vaiguru Ji Ki Fateh, on behalf of Sikh Empowerment Committee convener and entire committee and Sikh Council Chairman, I welcome you all at today's event. Sikh Empowerment Committee is not very old. We are just more than 1 year, little more than 1 year old, but in this year we have tried to help our community ladies and other ladies to conquer their goals as much as we can. We did many events for our elderly ladies, because I can see many new faces. Unfortunately, we can't see old faces again and again. I don't know what the reason is. So I just want to let you know what we have done in the past year. So for elderly ladies, we did workshops, like simple things, how to operate their phones, their WhatsApp, and the apps like, simple apps like Uber and M-Pesa. And we went to Mombasa also for all these things. Then we did a workshop on mental health also, because many of us are suffering in one way or other. Unfortunately, our expert is not here today, Ravi Jobber. She did that workshop, and many others. Then our biggest thing is Cause in Business Group. It's a WhatsApp group where our ladies can sell their products, and it's easier for people to buy on that. It's helping many ladies, but still they are complaining that the profits are very low and they can't manage their finances. So today's event is specially designed to enlighten on that part of the finance and tax. And our expert speaker is Mr. Sandeep Singh Main. He is husband to one of our members, Simran Main, and he will help us today. Now I welcome our convener, please come and say a few words and introduce our committee and our speaker.
Thank you. Thank you very much. Ladies and gentlemen, you want me to speak in English or Punjabi?
English.
English. But you can understand Punjabi as well.
I say for my daughter's sake.
Okay, I'll do it both together. Anyway, I welcome you all to our another program, educational program for women empowerment. We have been trying to empower women, and in all communities, as you know, men are working, women are at the background, but they are doing a lot, and some of them they are operating from home in one way or the other. So we have been trying to help our women to come out and do some more business and also make some money and be in the limelight as well. On this group, which is Women Empowerment Committee, we have over 500 ladies. It's only for ladies actually, because men don't need this empowerment, they are already in power. So,
Either he's agreeing or
so, but I'm happy to receive three gentlemen here, and I would like to thank you all to come to this program. Women Empowerment Committee is a subcommittee of Sikh Council Kenya. Sikh Council Kenya is doing a lot of work for the community. There is this is our office, and that side one of our young ladies, she sits there every day to help the community to do all the logistics which women can't operate. Even men, they don't know how. Sometimes back there was a marriage thing in the Kenya Gazette that every couple who got married before certain time, or they are married in another country, they have to re-register. And Sikh Council did a wonderful job in that aspect, and I really appreciate that. For your marriage, you can come and ask her to help you to fill the form, but you have to marry yourself, your wife. So she gives you guidance and helps you to fill the forms, even when you want to do your new what is this number plates and your ID renewal and all. It's a service to the community. And our committee, we are doing service to our women, even men if they want, in one way or the other. Now this, today we thought, as Mandeep had just mentioned, women are doing businesses, and sometimes those who are doing, they must have realized that city council people walk in. I don't know from where they get the knowledge that somebody is making samosas at home, or they are doing a small business of stitching. So they say, where is your license? Okay, even if women have registered, they still ask, this premises where you're operating, it is not commercialized. So, they always start from 20,000, 50,000. So they, pocket a lot of money, and poor women, they don't know what to do. So we thought it is a good idea to invite the expert in taxes and how to enhance your business, Mr. Sandeep Singh Main, to assist us how we can go forward. And do we need to pay tax, and how much it is, and how do we do it? So he's here, and let me introduce him. First, let me introduce my committee. Some of the members are not able to attend because of other programs. I'll start from this side. Mandeep, she's Mandeep Kaur, and she's actually a doctor, but she doesn't practice that, but she's a good help for the family health and for us all. Thank you, Mandeep, a very active member on our committee. And next is Main, Simran Main, her husband Sandeep, and she's equally qualified and clever and smart, I would say. Sorry, so you're among women today.
It's women, sorry.
She's a very intelligent lady who does a lot of work, and she has a pharmacy.
Yes. A pharmacy that specifically deals with chronic medication. But as far as profession is concerned, I'm in the healthcare space. I'm a healthcare professional in terms of leadership and management.
Yeah. Thank you so much. And next comes Surinder Khalsa. She's another one of our ladies who does everything. She's all-rounder, and she's an IT expert, and she helps us in designing our posters and all. Thank you, Surinder, for your contribution. Next, she's our, next to her is our immediate chairperson of Sikh Women's Society. She's Darshan Kaur. Darshan Kaur?
Semi.
Yes. Ishi Sami is my co-convener for this program. She's a lawyer by profession. Thank you. She's always there to help us out. And she's also Assistant Secretary of Sikh Council, Kenya itself. Thank you, Ishi, for your all assistance. And Sonia Rajbans, she is an educationist, and she does a lot of education and helps in educating children and women and training the teachers. And she's a big contribution to Sikh community. Thank you very much, Sonia. And I think Harleen, today she hasn't come, she's busy elsewhere. Thank you, all of you, for doing your work. And I'm very efficient in Kenya Empowerment Committee. Now I will introduce our speaker of the day. Sardar Sandeep Singh Main. He is a partner tax and regulatory services and head of the private East Africa. He has a lot of what I would say positions in this department, and he's an expert. I'll read a few, otherwise we will be only introducing him till trouble. Sandeep is a partner in the Tax and Regulatory Services Department and doubles up as the KPMG Private Enterprises, focusing on private and mid-market and emerging businesses. He has over 13 years experience. Sandeep has been involved in general and specialized tax compliance services. He has undertaken tax planning and tax risk management for various clients to help them structure their businesses. Sandeep has also advised several international investors. he is being actively involved in offering strategic tax planning and tax advisory. Sandeep's portfolio of clients includes some of the prominent clients in the sector of financial services. Sandeep is a fellow of the Association of Chartered Certified Accountants, ACCA. In addition to his role as the head of the private enterprise and tax partner, Sandeep has taken up the role of the driving tax technology as the lead for the tax transformation in East Africa. Ladies and gentlemen, let's invite Sandeep to give his talk today and enlighten us. Welcome, Sandeep, to this program. Thank you. And keep your questions ready to ask him after his presentation.
Right, good morning everyone.
Good morning.
So my name is Sandeep. Hope my English is okay, but if we need Punjabi, then Sonia is my
At your service.
translator. Yeah, so as introduced, I'm a tax partner at KPMG, and today I'm here just to talk about financial planning and your tax obligations. I think I understand that the businesses here are largely small businesses, but there could be one or two very large businesses in the room as well. So the large businesses, just bear with me as I take us through the smaller business conversation, because I think that's critical. So I'm going to cover the objective of the session today, why we're here, what's the interlink between you planning for your finances and tax, and why it is important. And then we shall talk about financial planning a bit. I'll take care of the tax elements as well, and then we'll get into a Q&A. But if you have burning question you want to ask me, just raise your hand or interrupt me. I don't mind, right? And please, I've tried as much as possible to be as basic as I can, but sometimes I might have some jargon that I've used that you do not understand, and let me know, right? So really, this is the objective. We need to understand why financial planning is important to us, and how tax plays an important role in whatever we do. The chair mentioned that it's very important for us to as we do our businesses, a revenue authority is always going around. How do you identify what is your obligation, as opposed to running with fear that you might get scared that, oh, this guy is from KRA and I need to just pay him something for him to disappear. That's not the right approach. Okay, and we'll go through that as well. And these are the 5 P's, really speaking. So proper planning prevents poor performance. So if you do not plan your businesses, even plan your life, you will never succeed. I think that's just the general underlying messaging here. So in terms of the financial planning, when we talk about planning, it's really talking about the future. It could be the short term, it could be the long term. It's never the present. So when you sit down and plan your business, you should know as a business owner, where is it that I want to go? And normally people do a plan of 5 years. That is a long-term plan, not 10. And then they break it down to a shorter, say the next 12 months, that's my short-term plan. If today your business is say doing 200,000 or 50,000 or 10,000 shillings, how do you want to grow it within the next 12 months? But you must have a plan in mind that within the next 5 years, if my business today is doing 100,000 a year, I want it to be a 5 million or a 10 million shilling business. So how do I get there? So between where you are and where you want to get is what you're going to need as your strategy. And a strategy is a different conversation. I'll not talk about it, but it has specific things about your market, your customers, where you're sourcing your raw materials, and your marketing element is very critical on how do you want to develop your brand and show the customers out there that you're a trusted brand. So credibility and trust is critical in your whole strategy, but the planning element is where I'm focused on right now. When we talk about financial planning, this is again your personal goals. As a business, you have your revenue that you're going to earn, your costing, and how you're going to sort of match the two to earn either a profit, or in some cases, we end up in a loss, and I think you mentioned that as well. Why are we in a loss? It could be a temporary thing, but how do you convert a business to be profitable is what we should also be discussing. And I must say, it's a very big misconception that financial planning or tax compliance is for big businesses. It is for any business. As soon as you start your business, you need to do financial planning. Okay? Now, when we talk about the pyramid, the financial planning pyramid, that's exactly what it is. You guys can see right. So you have to start off with the bottom, which is really your wealth protection. And this is where we are today. We're trying to protect the wealth that we are trying to generate within the business or within whatever streams of income that you have. From wealth protection, you will then move to wealth creation, because money makes money. Once you have profits in the business, you can then reinvest these profits. You can apply for loans from financial institutions or well-wishers of family. And this is what most family businesses are doing, even today, the large ones as well. They really do not want to go to banks, so they'll go to family and friends and say, look, my business is profitable. Can you give me a loan of maybe $1 million bob, and as opposed to paying a bank 24% interest annually, I can pay maybe 10% every year. All right, but your business needs to be profitable. So that is where we go to wealth creation. And ultimately, when your business is big enough, you need to think differently. You cannot be using the same run-of-the-mill sort of conversation and say, if you're in trading or making cakes or making stationery or whatever it is, that's what you continue doing. You can use the money that you're generating to diversify. Because today, the product relevant today is not necessarily going to be relevant tomorrow. So it's very important to be agile and to think through. So whatever services you're offering today, always find a way to shift and change. Okay? And that's why I'm predominantly in tax. But because everything is moving towards technology, I too had to invest in myself. I did a technology and data analytical course, and today I'm leading the technology business for KPMG for tax. So you have to be agile, you have to invest in yourself, but this wealth diversification is going to be very important once you're sure your business has reached a certain threshold based on your personal plan and goals. Now this is how financial planning works, okay? And we're going to have a bit of a conversation here. So when we talk about financial planning, there are 3 cogs, and those are really the cogs within financial planning. You have the biggest one, which is record keeping, okay? And we shall talk about this a bit later. But in essence, how many of you have what we call a profit and loss? Do you know your profit for the business? I can see a few guys saying yes. A few of you are just looking at me and like, what is this guy talking about? You know? But the profit and loss is part of record keeping. And then obviously you have what we call a cash flow statement. So your business could be profitable, and bear with me as we go through this. Okay, so you have sales of 100, you have expenses of 50, your profit is 50. But have you collected that 50? So your business could be paper rich, but actual money is zero in the account. I don't know if you've experienced that. Again, depends on how you are dealing with your customers, right? So I'm not talking about paper profits. So cash flows will tell you this is how much money you can actually spend. So as much as you say you should have 50 bob in the bank account, you don't have anything. Okay, so the cash flow statement will tell you exactly how your business is performing, and we talk about that again. And then you have the tax element, which is also very critical. Tax before was not a very big thing, but today, especially the current government, it's top of mind. And why is tax important? Because the government uses tax revenues predominantly over and above borrowings to run the country. And if you're doing a business, whether it's for 1 shilling or 1 billion, they expect you have paid tax. Okay, so and tax is paid on profits. So it's very important that you understand that if my sales are 100, the costs that are booked into my business, are they business related? Okay, and we'll speak about that as well. And then I think the most important part here is costing your products. How do you cost your products? And this is the conversation we're having at the moment. If you're making cakes, for example, where do you get your raw materials from? Are you going to the supermarket? Or are you going to other people who are supplying such products that could be cheaper? And I always say cheap sometimes can be expensive, because you could find that you're buying a cheaper, I don't know, maybe atta, but then the quality is not what you want. Maybe the quality of the cake doesn't come out the way you want it to be. That has a major impact on your branding. We talked about that initially, and your market presence. Because if you're known to have cakes that are depressed, even though I'm your friend, I'll be like, can I really buy from you? You know? But you're like, no, buy from me, because you're trying to manage your costing. Okay? It's important to manage the costing, but quality is also very important. Customer service is also very important. All that is part of costing your product. Your time is how you have to also cost your product. So as you look at how you're costing your product, you must say that, look, if I'm buying X amount of flour, these many sprinkles, this much butter or cream or whatever it is, this is my total cost. How many cakes am I going to be able to make out from this raw material? That's called raw material. Okay? How much electricity have I used? Very hard to determine sometimes. Do I have a house help who's helping me washing and cleaning and whatnot? Okay? Very granular, but you need to say this is what I need to put in. Now, when you put in all your costs, and you say, let me add 10% markup, the cost of the cake that you're selling could be 200 shillings, but the market is selling the same cake at 100. There's something you've not done right. Okay, and sometimes the person selling the cake at 100 is working on turnover, which means they're selling much more than what you are selling at. That's why they can be cheaper. Not necessarily their costing is lower than yours. So that's why I say when you start a business, you need to start with bare minimum expenses. So if you're starting a business out of your home, it's fine. The county and the revenue authority have not yet got to that granular level. I'll tell you how they're going to get to that place as well. But the element of costing your products is very important. It could be your services, it could be your products. You need to understand what is my value over here. But then again, you need to also ensure that you are within the market prices. And as a business starts out, I have to admit that sometimes you have to go lower than the market, even though your costing is higher. And that's just for you to get your foot through the door. Okay? Are we together on costing the products? Any experience around that, on how you have done this in the past? Anyone wants to share? Be bold. Yes.
How do you cost services?
Very good question. So we sell services as KPMG as well, and we cost them based on our time. So we have come up with a blended rate on an hourly basis. So I would say my hourly rate, if you want to take my services, if it's a KPMG rate, it's $350
Per hour.
per hour. Per hour, yeah.
Per hour.
That's the discounted rate. I'm just giving you what we charge different clients. My top rack rate at my level is actually $600,
Okay.
and my lowest is $350. So there are clients that pay us in between $600 an hour to $350 on an average basis. Okay, that's KPMG mainstream. But then I told you I run enterprise. So enterprise is purely for startups, MSMEs, and family businesses. So the rate there is very different. There I'm going in to make a loss, but to add value to the business. So that's what I'm saying. I'm creating my brand, the KPMG brand, in the family business space, who are used to smaller auditors or smaller consultants who they think are cheaper, but not really. So with family businesses and startups, we make a lot of time investment. So that's what I'm saying. You need to know how to cost yourself. And then the issues that businesses have, from where I sit, are mostly similar. So if I've done it for one business, I know how I can manage it for the rest. Okay, so that way you work on efficiencies and you reduce your cost for services comparatively to the rest. But you need to understand how much do you think you should be charging per hour. And I have a friend who's in their own space and she charges 3,000 shillings an hour for her time. Okay?
What is the standard rate in
Yes.
consultancy?
So market research is very important. Is it 3K? Can someone charge maybe 8,000 or 10,000 shillings a day as opposed to an hour? So knowledge about your market will really advise you on costing for your product or services. Okay? Who has an experience around costings? Where they felt they were too low or they were too high and they went to the market?
Yeah, I have a business, stitching business.
Yeah.
And so I make suits, dresses, and clothes. And I have realized how over the years, I've been working for the last 30 years. And this is just with experience I've learned, though I didn't study how to do the cost, but it was simple thing to have more, less expenditure and more selling so that you can make profit. But there are hidden costs which I didn't know before, like my own time. That I'm standing even in the evening when people are sleeping, I'm cutting the clothes. So I'm not counting that. Other people, they close the business at 5 and they are gone home. And I'm still working till 10 o'clock. So I wasn't realizing that I'm putting too much my time and my life into it, which others don't, and yet they make more profit than me. So over the years, I've come to realize that I have to see how much I have to charge. That if I make one suit during the day, this person how much I'm paying and how much profit I will get, and that's how I started calculating.
Yeah, I think to your point of human costs, that's also very a critical one. So you need to understand from experience, as you mentioned, what would be the costs that you've never factored before that are impacting your bottom line. And those now need to be part of your costing. But even better is that when you start now, if you've done a business say for 1 year, and now you're into the second year, you need to prepare budgets. So if you're now starting say Jan 2025, this is the time you all start thinking about budgeting for 2025 based on your experience for 2024. So if you've made sales up to say October, X amount, you say how much more can you make to the end of December? You say this is where I'm going to close, let's say 100,000 shillings. Okay? For 2025, based on your strategy, how much do you want to grow? Let's say even 10% growth. Okay? So you say from 100K, I now want to do 110,000. Or even it could be 150,000 for the year. But my expenses are also at 100K for this year. Which means I'm making no profit. Okay? So then how do you then take the expenses that you've been tracking? And that's why I said record keeping is going to be very important. But how do you take the expenses that you're tracking and see what is relevant and what is not relevant? And there are very many times you say you have sold a suit, for example, that money you think it's yours. And that's the mistake we all make. Even though you have not registered a business, you need to separate your business from yourself. That financial discipline is going to be critical. Because you can't say, yeah, I sold a suit of, 5 or 10,000 shillings, and this is my money. I'm just going to pocket it, I'll spend it wherever I want to, give it to my children or my grandchildren or nieces or nephews or whatever, or myself. That money is the money for the business. That is what we really need to understand. It is not money that you can just take out and spend. You can do that now because most of you probably haven't registered a formal business. But the mindset you need to start creating is, what if this was a formal business? From a formal business perspective, a limited company is a separate legal entity from you. When you draw money from that company, when you eventually do register one, it will be as if the company has given you a loan. So you can't just remove money from a company without considering the negative tax and financial implications.
Sandeep, here I would like to share it. I think most of our women would know also that our family businesses are run on that way, that they have made a profit, and everybody, suppose you and me and Ravi, we are 3 partners, and 2 brothers and 1 sister. So they just go on, there are 2 to sign, and they just sign the check and take 100,000, you take it, and Ravi is going for a holiday, he's taking 200,000, and at the end of it, we are all bundled up, and when your children grow up, there is no record how much money we made, and who has taken more and who, because they haven't got salary thing, you know, that so and so should be paid this much, you manage with your salary, and they just go on withdrawing, and that is the reason we always have conflicts in the family businesses, especially when the children grow up and the business has to be divided. There is a lot of chaos.
So one of the key things about financial planning is governance, and I think you have spoken to that. Not a topic of today, but I have seen, so I deal with a lot of family businesses today, and personally I'm also as surprised. These are huge family businesses running billions of shillings, but when they came to my doorstep, this is now the 3rd generation who's now going to get involved in the business. So the first generation, some of them have passed on, but the first generation and the second generation, when I say first generation, are the founders of the business, and then the second generation are their children who are taking over. They have a very similar way of thinking, okay? But then the 3rd generation, who the second generation has taken pains to send out there to study, go study in the UK or the US or Canada, and then they decide to come back to the family, they'll be like, you're doing it wrong. Where's your salary? Like you mentioned. Where are the governance structures? Why are you not a CFO and you've done accounting? They'll ask the parents, or they'll ask the father, you know more about this business, why is your dad still grandfather? For example, the children now are the ones that will cause these nuances. So before that happens, you are right. Governance structures are very important. So what we are advising family businesses is to come up with something called a family constitution. Okay? In Kenya, and Ishi can chime in here, is that the will is not a legally binding document. A family constitution is also good governance, but not legally binding either. Once you have the family constitution, now you find ways and means of integrating it within the legal company. So you say, if we have 4 brothers, you say, no, none of us are fit enough to be a CEO. Let's hire an external person. And give the person a KPI. And that's why I went back to the initial conversation, your strategy. Where do you want to be in 5 years? This is the role of the CEO. Okay, let us all go on salaries. If you're not actively involved in the business and you're just drawing money, get onto a salary. You do not have a right to earn more than the person actually employed. And then if it's a larger family business, we're now advising them to form boards. When you have a board, it's not family business boards, they have external parties. So non-executive directors who are not related to you, are not your friends, but have experience in your sector, can tell you how do you take your business to the next level. You pay them, obviously, but boards meet once a quarter. So in the family, it's only one person representing the family. And that one person is not even a family member. It is who the family has appointed jointly. Because I cannot, if you have 4 brothers, all of you will say, I want to be appointed to that board. So we all say that, look, out of the 4 of you, interview someone that all 4 of you are aligned to. And that one person, and this is happening for big family businesses now, that one trusted person who will not spread stories of mine to my brother or to the other person. So that one person has to be very trusted, almost like a lawyer, and is bound by confidentiality. Will not talk about or misuse that power that he or she has been given, but then represents the interests of the family because they're well compensated. You can't have someone that all 4 of you are representing and then you're paying him 100K. It's a large business, obviously you need to take care of this person, and you're looking at probably $1 million or something there. So you have to be able to make that investment because he's running a multi-billion-dollar, not shilling, industry that you guys are all benefiting from. So governance structures is very important to answer your point. And how do you do that is really around the family constitution. I'm finding myself playing a lot more, rather than a dance, I'm find myself playing a mediator role, like a therapist. Because they will come here, they will fight in front of me, they will shout, they'll scream. I tell them, I give them timeouts the way I took my children. And I say, please take 5 minutes, 10 minutes, go in the corners and calm down. We have to resolve this issue. It's not like, it's okay to be emotional. This business, money, ladies, is a very emotional topic. Yeah, we could be husband, wife, brother, sister. Money is a root cause of all evil, which is true. And greed is the worst thing. And that's why this financial planning is a very important conversation. And governance is critical as you grow your business to the next level. And if you have friends who are doing business together, let me not lie to you. I've also seen in the startup phase where 2 people come together, they give birth to an idea. Then they implement the idea together as friends. But 1 year later, when they see, hey, this is going really well, then they start saying, let me try and talk to my accountant to give me some money and not tell my partner. Okay, and of course accountants play a critical role. So if you find an accountant that you're paying 500 or 1,000 bob a month, that guy's not going to help you. Okay, just putting it out there. You need to ensure that you have an accountant with good integrity and ethics and values. Because if you don't get that right person, your business is now going to grow. All right, we're moving to record keeping. So, the first component is really the P&L that we have talked about, where you determine your revenue on an annual basis. And what I said we can do better is break your financial year into quarters. So you can say, this is what I know I need to make January to March, and then now April to whatever, like that. And then your expenses is what you really need to track. What I do with startups at KPMG is advise them to maintain an Excel tracker. I'm sure all of you know how to use Microsoft Excel. Yeah?
Not all.
Not all? Okay, do you have a book? All of you must be having a book and a pen.
Yes.
Okay? All you need to do, if you don't want to computerize, which I think you need to really learn how to do, but it makes it easier and quicker, rather than using a book and a phone to do calculations. An Excel can easily give you your total summary for the month, or the quarter, or the year. Okay? And it's very simple to use. But immediately here you need to have your revenue on one column, and then now you start tracking your daily expenses. So whatever you actually incur as a business, you need to have a receipt for it. Okay? You need to have a receipt for it. EDR. And we'll talk about the EDR. But there's some businesses that do not have tax receipts. They might give you a cash sale, and that's going to change. Or it has changed, but maybe we're not aware about that. But once you have your revenue and you have your expenses, you'll be able to match what your profit is. And on a quarterly basis, you will clearly tell that, oh, I think I have incurred too much of a cost. Where did you incur that cost? You can do what we call analytics. Because you have to analyze your profit and loss account to determine where am I going wrong. Is my branding not good? So, financial management will give you insights on what you need to do differently. Okay? If you're making losses in your business, and the first year, if you've started, I think it's fine. But if you're continuing to make losses year on year, something is not right. And you need to pinpoint where is it that I've gone wrong. And this record keeping will help you do that. Maybe you are spending too much on yourself and put it as a business expense. Possible. Maybe wherever you are renting out a premise, if you are renting one out, is it worth it? Can you work from home? Okay? Or can you find a cheaper but a strategic location? And the reason I say that maybe in year one you might not make profits is because you yourself are making an investment in strategic places. If you're running a big business and you think, look, I'm going to grow very fast, I need to have my offices in Westlands. Or most of my market is in Parklands, I need to have an office or a place to do business there. Okay? Or I need to move to Mombasa. Or if all your business is in Mombasa, perhaps you're incurring a lot of transport costs from Nairobi to Mombasa. Do I need to consider just relocating if that is where I'm making most money and Nairobi is not working out for me? For example. So all these things really matter, and that's the analytics I'm talking about. But without your data, this is data, you will not be able to make those informed decisions. So whether you use Excel or whether you use a handwritten ledger, do it and start today. Okay?
Something,
Yeah.
I have a question. Most of our ladies who are working from home, they do not have registered businesses. Once you register, then you have to pay the tax and the
Yes, I'm
regulation.
going to come to that next
Yes.
under tax. But
Yeah.
thanks for that. The next part here is really around the cash flow statement, which we have spoken to briefly, and this is what it really means. How much cash have you received? What have you spent? And then do you have any amount left to reinvest in the business? So if you have sold to your friends or to your clients and they owe you 100,000 shillings, and that is all you have sold, your total sales are 100,000, you have recognized that revenue. And if your costs are 50,000, your profit should be 50K, but you have none because your customers have not paid you. So without having actual cash in the bank or in your M-Pesa, you're not going far. Your business is heading towards bankruptcy. Okay? So it's very important as you make a sale, it should be cash on delivery or pay me a mobilization, pay me 50%, and that's what I've seen at least smaller businesses do. Even the large ones actually, even KPMG asked, can you pay me 50% mobilization and then 50% on delivery? Okay, so if big businesses are doing that, why would you give credit? Okay? Do not operate on credit, that is definitely a death trap. And more so when you start giving credit to family and friends, because those will be your first customers, right? She's my aunt or he's my uncle, he's going to support me. Then he says, yeah, you deliver the product, I'm going to pay you. That money doesn't come in for months on end. Guys, business and family, separate the two. It's going to become even more difficult if you go to the next one, splitting your business and family, registering it.
Yeah.
If you're selling to your family and your business, your company cannot collect, you have a big problem. Okay, so this cash flow management might be a very small thing, but it's actually the biggest thing for your business. Without cash in the business, you will constantly be putting in money from your own pocket, you buy your raw materials, but you know people owe you money. How do you track that? So this is very important. Be clear. And if you're my mother, my father, my husband or my wife, or my uncle or my aunt, who's helping me start my business, be clear about your intention. And please, we'll make a supply, but you must pay me. Okay? Are we together? You have to draw a line. That's what most Indian guys don't do really well. Okay? They do not draw a line. Okay?
Right.
So that all will then give you to your projections of where you want to be in 5 or so years. Now, this is also a very interesting topic. It's around the tax management, and it's now what the co-convener talked about. So tax, I've drawn a couple of circles around it, and I'll speak about them. The first one is around e-TIMS. Anyone knows what e-TIMS is? Online invoicing.
Your invoice sent through e-TIMS and they have a record.
Did you hear what she said? You heard it, right? It's Revenue Authority. It's a form of online invoicing where Revenue Authority will have your information and the information of the person that you've made a sale to. Because you have done an electronic invoicing. This is mandatory as of 1st January 2024. This is mandatory e-TIMS. So if you're running a business, and why this is important is for your growth. Okay? It's okay to be selling to friends and family who are end user customers, but if you want a business to grow, you need to make supplies to companies, to larger, I don't know, maybe supermarkets, if you're in the cake business, you want to go there. If you're in the tailor business, you want to now supply uniforms perhaps, or suits. To now, companies that are manufacturing who have uniforms. So if you want to grow your business, ATIMS is going to be a major obstacle if you decide not to comply. Okay? So this on its own is where now you have to register for ATIMS. It's a very simple process. Revenue Authority initially were making sure that you do it using an online platform, but today even a small business, without necessarily going through the entire circle of online registration, there's a USSD code. So even if you tell me that you don't have a smartphone, you can use those things called Bambas, right? You can actually generate an ATIMS with the Bamba. But the first thing that's going to do to you once you dial that USSD code, which is *222#, is ask you to register for a PIN. If you do not have a KRA PIN, that's it. But once you dial that, say you're supplying to a big company, of course they want an ATIMS invoice. So once you now say, I'll give you the ATIMS, you dial *222#, register yourself, then it takes you to the next step of issuing an invoice, it's done. The invoice will go to that company. But your sale has also been reported at Revenue Authority.
But some of the vendors, they emphasize not to bill as a ATIMS, otherwise we are going to charge you 4% more or 6% more. So they tell, just take us a normal bill from us and then we'll subsidize our rates. So how it's going to...
That is the conversation, or that's the mindset that you need to move away from, even as a business owner. Because while they say that we just give you a handwritten thing, imagine this is what Revenue Authority is doing today. Imagine your revenue is that 100K and then your costs are 80,000, but all your 80,000 shilling worth of suppliers haven't given you an ATIMS invoice. Cash sales, whatever it is. What's going to happen? When Revenue Authority do catch up with you, they're going to say this 80K is not supported. You do not have an ATIMS invoice. We're not going to allow you to take it as a business expense, which means you have to pay tax on a full 100,000. How tax works is you pay tax 30% on the profit. If you're in a loss, you're not paying tax. Let's understand each other. Well, I'll talk about DOT there, it's a separate conversation, but if you're under the 30% regime, then you're not going to pay tax if you're in losses. But if you have that 100,000 and the suppliers told you I'm going to reduce or increase based on no. If you want to run a business and you want to be successful, you tell them it's okay, you charge me the 4%. I'm going to onward charge to my customers anyway, or I'll find a way to absorb it. Because remember that 4% could also be you trying to increase your client base, so you can always recover it. But the compliance for your business is very critical for you to. So insist on an ATIMS invoice, and of course the challenges would be if you do not have a PIN number yourself. If you have, then that's fine. If you don't have a PIN number, then obviously they cannot include the buyer PIN. Because now what they do on ATIMS is, while the seller PIN has always been there, now you can include a buyer PIN. I actually do that when I go on for client entertainment using the KPMG credit card. If I go to whichever restaurant, I'll tell them put the KPMG PIN as you give me my receipt, so that KPMG can take a deduction.
That's what I was asking. Normally, what I've seen, we get normally 3 types of bill. Simple handwritten, petty cash kind of thing. Another we get it from supermarket. And the third one what we are getting from restaurant, where my husband every time tells them to put it care. So how government consider all these 3 types of taxes,
So for restaurants, once they put in the PIN, it's going to be deductible. For supermarkets, you can actually tell them, put in my PIN for the company or my business, and they do that for you. If you don't ask, and this is what I'm saying, it works. This is the general rule of life.
Petrol pump.
Sorry?
Petrol pump.
They too can put it.
Yes. They will put the petrol, I tell them put mine.
Well, I wouldn't advise you to use your personal PIN unless
No,
you
companies.
company PIN, yes. But there are different conversations around that. So if you're using your company PIN for petrol, you must make sure the car is also a company car.
Companies, yeah. Cars.
Yeah.
Companies cars.
Those are other different issues around tax. Yeah? So you have to be very careful. The basic rule about tax is that incur an expense that is for the furtherance of your business. It cannot be a personal expense. So don't go fueling your car, your personal car, and then say put the company in. If that happens and the revenue authority see that your company does not even have a vehicle, why fuel it? The one that I know we can get away with is entertainment. So you go out with your family perhaps, have a meal. Okay, it's a smaller thing. Book it under the company. Company pays for it. But the PIN has to be the company. Those are ways you plan your taxes, not evade them. Anyway.
During working hours.
Well, I sometimes can take a client on a Saturday. It happens. So
I have a question about
Yes.
eSIMs, because as far as I understood that it is one of the contention points of the bill that is being currently in, whether it's going to be allowed, not going to be allowed. So we have a lot of vendors who subscribe to the thinking that if they're still under the tax limit, which is at 5 million, then they're not they're not liable to pay tax, and therefore they don't need to subscribe to eSIM. So is that incorrect?
very incorrect, and a very good point to raise. So the 5 million is purely for VAT threshold to register for VAT. So VAT is where now if you meet an annual turnover of 5 million shillings, you must register for something called VAT. Okay, and anything above 5 million, you must charge 16% onward. eTIMS does not have any threshold. Even if you raise an invoice of 1 shilling, it should be eTIMS compliant because eTIMS is not linked to VAT. Okay, and that's how even they have developed the system. So you can raise even an invoice of 20,000, but your services are not valuable. You're maybe below 5 million, or you're not subject to VAT. It will not pick VAT. You're fine. And then the issue on the contention about the Act, the 2023 Act was taken to court. 2024 never even happened. It was a bill.
It didn't happen, yeah.
Yeah, the 2023 Act is in court,
Yeah.
but there was a stay order given by the judge that the Act should remain in force until a decision is made. And that brought into force eTIMS.
Okay.
So knowledge, and that's one of the things down there, updates are very important. Okay, so that is very clear. So there was the Finance Act 2023. So what happens every year is that when the government is trying to raise taxes, they introduce new measures. Like the housing levy, everyone know about it? I'm sure. And do you know that whether you have employees or not, you're meant to pay housing levy?
Yes.
You do know that, huh? The 1.5%. So normally they thought that it was only for if you have employees, then the employer pays 1.5 and the employee pays 1.5%. But a lot of startups do not have any employees. It's the founder themselves or the co-founder. So what the Act said is that you're meant to pay 1.5% on your turnover.
On your
Turnover, your sales monthly.
Okay.
So if you make a sale of 5,000 shillings, you better pay 1.5% for the 9th of the following month. So the housing levy has one of the things that was the contention was that as well. All right. So eTIMS is very important for you and your business. So make sure as you try and get invoices to support your expenses, they should be eTIMS compliant. How do they look like? There's a small box down there, like a QR code at the bottom, and then you must insist where is the buyer pin, which is your pin, if you have a registered business. Are we together? Yeah.
There's a question from somebody who's joined online. They're asking, can an eTIMS invoice be generated using your own personal KRA PIN? For example, if you're a sole proprietor.
Yes, you can. So if you already have a PIN that's registered, then that PIN is the one that you're using to make a sale, right? If you're a sole proprietor, then that's your business PIN anyway. So you have to then generate an eTIMS invoice using your business PIN anyway. So if it's Sandeep, who's a sole proprietor, my PIN is what I will use to make, maybe if I'm making a sale to you, so the eTIMS will be under my PIN. The revenue is under my PIN. Okay? The tax will be paid under my PIN. So I hope that's clear, but you must have a PIN for you to raise a eTIMS invoice. If you do not have a PIN and your supplier or your customer is insisting you give them an eTIMS compliant invoice, like I mentioned, you first have to register for a PIN. If you're a small business, you use the USSD code, start to hash. First thing it does is give you a PIN. Very quick, by the way. Before getting a PIN could be maybe a week, 2 weeks, but now it's instant. You get a PIN certificate and now you use your PIN as a seller, which is what now this person will use as a seller, and then now you do the buyer PIN.
And what if it's an unregistered business?
You will not be able to issue items, invoices at all.
I'm sorry to take you back. There's one question from somebody who's logged in online. I'm going to take you back to record keeping. She's
Okay.
asking, how would it affect your business if you choose not to register it, considering that you only receive occasional orders and profits rather than a consistent daily or monthly stream?
So I think if you want to grow, you must register a business. If you want to build trust and credibility, you must register a business. Even the people that are currently giving this individual orders, it could be temporary, because if this business is meant to grow, you cannot grow with your same circle. You have to expand, which means if you're going to market yourself further, you're going to get into the limelight of the revenue authority. So when that happens, because the more you market yourself and increase your brand presence, you will get more eyes on you. Okay? If you intend to stay within that smaller circle and you're happy with the occasional orders that you get once every quarter or once every year, it's okay. You do not need to register for ATMs or even register a business. But if your ultimate aim, and that's why I'm going to take you back to the very first conversation, what is your goals? Where do you want to be in the next 5 years? Is the current income sustaining you? Are you doing this as a by the way, or are you doing this to grow? If you're doing this as a by the way, no harm, no loss. Okay? You're just doing it as and when I get something, I would say, fine, I can help you, you pay me something small in cash, I'm not going to give you invoice. And that's what some people do. They have those precursors and say, look, I can help you, but this is not my main business. I'm an employee or I'm an employer or I have my other businesses. Then it's fine, you can continue with that norm. But if you want your business to grow, okay, you want to expand beyond your quarterly cycle that you're saying you're getting an order from, then you would need to register. Because when you register, or without registration, you can't start branding yourself. I've seen Revenue Authority, and I think you asked the question, how do they know? They know because someone has spoken about you. They know because you have sold to one person, and the other person has said, you can get this from this person. Revenue Authority do not do the audits that they used to do when I first joined tax about a decade ago, where they just send you a list of information and they wait for you. It's a back and forth, you give them a whole data dump. Today they have a specialized team within Revenue Authority called Market Intelligence. All these guys do a walk around, they check with businesses, they even go and pretend to be customers. So eventually they're looking for data. It's not about anything else, it's about data. So once they have the data, they go back and check this. Who is this person? Are they paying tax? Bottom line. ETIMS was actually brought in to net in the informal sector. The people who are not paying tax, like the Kikomba market, the Mama Bogas. And don't be shocked, the Mama Boga is making a lot more money, possibly than your business. But she or he is not paying tax. Because we, as the consumers, are not enforcing it. We don't tell the Mama Boga, even though it's from my house, no, give me a tax invoice. But the hotels are doing that. We have clients who buy from farmers, who buy from individuals, like the Mama Bogas, who are saying, I can no longer buy from you if you can't give me ETIMS invoice. So that's exactly the case here. If the person intends to grow, then they would need to register, they would need to be compliant. Otherwise, it's the run-of-the-mill conversation.
What are the basic tax rules for non-profitable organizations? Like how government segregate, that businesses or this organization from it, like how they consider?
NGOs
Yeah.
is a very different conversation. In fact, there are new rules about NGOs. I don't know if anyone is aware of it, right? But NGOs, the primary thing is you have to register with the NGO board. Okay, so there are different types of non-profit. There's the NGO, there are societies, and then there's trust. I think most gurdwaras are societies, right? Most temples are societies, yeah, right? But an NGO is registered with the NGO board, and you have to go through an entire process to first be registered, and then from a tax point, it's very clear. You must have an exemption certificate. If you do not have that, I don't care. You pay tax. Donation income is specifically exempt. So as long as the temple, the church, whatever can prove that this is a donation income, it will not be taxed. You must have seen there was a case where the church was taken to court some time ago, I think last year, and the Kenya Revenue Authority said this is not donation income. These guys are receiving the rent and are saying it's donation income. So that income needs to be taxed. In fact, they even have a VAT exclusion because commercial rent is chargeable to VAT. What are they doing? Analytics, collecting data, collecting information. So we can no longer try and window dress things and say, we have received rent. I'm not going to give an ATM's invoice or an invoice. Let's put it under donation income. And then the rules for NGOs specifically have become very stringent. They are required to be audited annually. They're required to file their accounts with the NGO board. Unlike societies and trusts where you just do the annual filings to KRA, NGOs is a very different conversation. And now the new rules is that I think 15% of your accumulated, you cannot exceed that. You must reinvest it. So I don't know, the temples that are sitting with billions of shillings.
But I don't think that has been actually put into practice right now. I think somebody has gone to court on it.
It has gone
It has
to
gone
court. It is law at the moment, but
It has
once
gone
they,
to
Because even the Rotary Club and the Lion Clubs are affected by the same law.
Yes, yes.
All of them.
Yes.
But eventually, I think that rule is going to start.
But you should ask yourself why. Why? Because temples, churches, mosques
They're just sitting on
are
money.
cash rich.
Yeah.
And that's a conversation they've always asked, what are you doing for your community?
Yes.
There's so many children, for example, let's take, I'm sorry to say this, but let's take the Sikh community. So many highly educated children or brilliant kids who parents cannot afford their fees. What is the temple doing about it? For example, I'm not saying it's what you're doing, I don't know. But similar conversation around.
It's a very true conversation.
If you see your fellow community members sitting on the street, I have housing, why am I not putting them there? So it's also going to be a reputational thing, but of course these rules go beyond your own community. What are you doing for the people of Kenya?
Yes.
Are you digging boreholes? Are you spending the money that you're collecting as donations? And that is why some of us, including myself, and I'm sorry to say this, I never donate to a church or a temple or a mosque. I don't put money. I do it in kind. I'll pick 2-3 kids that I don't need help and I'll say, I'll pay for your fees. But I'll track it to see if they are adding value to that fees that I'm paying. So I'm doing things differently. It's only a matter of time until people decide that who am I giving this money to? Where is it going? Am I feeding the already fed? Or am I trying to do something to make a difference? So I think the impact is what people are going to start looking at. That's why you might be forced to spend that money at some point. So moving from ETIMS to the PIN, and this is where the registration conversation comes in. So if you're a business at the moment and you are not registered, you do not have a PIN yourself, you do not have a PIN for the business, and you're doing things, how do I say this? Under the table, eventually, again a similar conversation to the one that I had to the person who asked the question. If you want to grow your business, you will need to legalize it, make it legitimate. Don't be scared about the taxes to be paid. Those can be managed. Don't be scared about the obligations you might have. That too can be managed with knowledge. Your primary focus is, I need to grow my business to X amount, I will need to register. I need to do things as compliant as we can never be 100% compliant. Revenue Authority will always find a fault here or there. That's fine. That's life. But you want to grow, tomorrow you need a loan. Even if it's from a family member, it is from a friend or a bank. Or tomorrow you will need an investment. And then many times I've seen businesses come through the enterprise arm at KPMG who are looking for funding. First question is we have to ask them, are you registered? Do you have a company or a limited liability partnership if you're two of you? Otherwise, we can't take that conversation forward. So funding becomes a critical element if you want to grow a business. You need money to make money, right? So getting the right registrations is very important. PIN is a start. It's a very simple process these days. You hardly need any help from a consultant, but maybe the chairman here can help. If people do need to register things, you can get someone here, like myself, to do it on a quick basis, pro bono. You know? And I know Ishi does a lot of pro bono things for the Sikh Council. Anyway.
So
But yeah.
a small question. In the banks, when you want to open an account, they also ask for your PIN number.
True.
Even if you're not working your
Yes. Yes.
So how do we apply for those private people?
And that is why the banks also given mandate by central banks some few years ago, it's not a new thing, that whoever has a bank account can only open one if they have a PIN. It's become a mandatory compliance document.
Yeah.
So you can still go and apply for a PIN, but you must remember, even if you don't have a business, maybe you are a housewife or unemployed, whatever it is, you will have a filing obligation.
But you know, women are scared that once we register and have PIN number, that you might be tracked down to see if you have money in the bank or like that. They don't want to. I've seen in some organizations, if you are an official, you can't sign the check if you don't have a PIN number.
Yes.
That's also.
You know, that's another thing. So we go this way that she will sign, but you are the secretary. But I think KRA, they are following this.
I mean, why should we fear?
Yeah.
That's my question.
Yeah.
We should not lead our decisions
Yeah.
through fear.
Mm.
KRA is always going to be there. I mean, that's their job, to collect revenue.
Yeah.
But for you as an individual, unless you think you're hiding something in the past,
Mm.
maybe you're sitting on $1 billion somewhere. That's why you say, no, I don't want to pay. Different conversation.
Yeah.
Yeah, different conversation.
He'll show you how to hide it.
I'll show you how to plan for it better. But you should have nothing to hide.
Yeah.
So registering for a PIN and you do not have employment income in this country, you don't have a business in this country, you're okay. The only thing you need to do and remember to do is that you need to file a tax return, a nil tax return next financial year.
Mm.
So if for 2024, you need to file a tax return by June 2025
Yeah.
before the 30th.
Yeah.
Okay? So like my dad is retired, has no business income.
Mm.
He has a PIN number, so I just filed his tax return 1st January. I've done it.
Yeah.
Okay? For instance, filing obligations, very critical. Okay? So that is very important to understand. So the PIN number is critical if you want to grow your business. It's a different conversation if you're not a resident of the country. To get a PIN number, you can now get one as a non-resident. But if you want to work, then you need a work permit or an investor's permit.
Yes.
Investor's permit, you need about $100,000 to show them that it's sitting in the bank account in Kenya, and then you can apply for those. But if you are a non-resident, not working, but want to open a bank account here, you can get a non-resident PIN.
Okay.
Yeah, it's not possible, but you have to file the annual return. But you have no issues to worry about.
Sorry, I just want to ask you, what about these non-profitable organizations? Do we need a PIN for that?
Yes, absolutely.
100%.
As a society or as an NGO, you must be.
Have a PIN,
You
yeah?
must have a PIN. Yeah. Okay. So the other thing is around TOT. This is called turnover tax. Now this was introduced by Revenue Authority to help businesses that do not want to pay 30% on the profits. So if you're a business that's doing under 25 million a day, so it's actually 1 million to 25 million, but anyway, the threshold is up to 25 million shillings. You can pay TOT on a monthly basis. This was initially, but you pay this 3% on your revenue, not on your
Not on
profits.
profit.
No. TOT is a different thing, but it's a final tax, which means we are not concerned about corporate tax. But that does not mean that you do not maintain your records. That's record keeping, different conversation from TOT.
Is it still there?
It's still there. The 2023 Act had brought it in and it's still there, so it's still effective.
How do you show how do you submit the new returns when you have tax in your account and you not earn it from anywhere else but just collected it as a
Banked an amount in the bank account. Yeah. So right now, Revenue Authority has not fully integrated. Okay. You can still file a nil return without necessarily not showing them, but without them necessarily asking you a question. But yes, if you remember about a year ago, 1.5, KRA had deregistered over 1,000 PINs. You remember that?
Yeah.
That was because of non-compliance, but also dormancy. So they're saying that you're just filing a new return every year. Why do you need a PIN? So they had gone ahead and deactivated. So a lot of guys who are not working, don't have a business, said that I'm using the bank account because sometimes I receive money from my folks or wherever it is upstream, whichever country. But sometimes also I, whatever, also send money through my husband might pump in money here, then I send it out, whatever it is, for my kids who are starting out there. So they would understand that, but it goes through a process. And then they did help reactivate those pins. But to your point, if you are making bankings, you better be sure it's not trading income. If it is trading income, then you would have an obligation to disclose. And a lot of people say, well, I will not use a bank account, send it to me on M-Pesa.
Yeah, I have a question for that.
Did you hear recently that there was a bill that Revenue Authority had pushed for members of parliament to consider them getting access to M-Pesa?
Yeah.
You heard that, right? So Revenue Authority is looking for money everywhere. So M-Pesa eventually, it's not yet passed because of thank God for the Data Protection Act, but eventually they're going to find a way of getting that transactional data from Safaricom or Airtel. So you'll just be shocked that they have your data and they'll be like, we know you received X amount during this year, we have not seen you file taxes for this. Please explain. Simple. Then that's where you'll be like, oh my God, what do I do now? Then you come to go to the temple and start with pot, I guess.
So that it is erased.
Yeah, so transparency becomes very important. I say, don't fear declaring the income, but also understand what can you do to reduce that income that you have earned. It could be expenses that you generated or earned, and if not, it's 30% as the maximum that you need to pay.
That's a lot.
It is a lot.
30% is a lot of money.
It is a lot, but you plan yourself. Let's say these are my business expenses. It could be your business does not have a car, but you are using your personal car to go and travel and make these runs and whatever. Do you know you can claim mileage legally? It's now I think 60 shillings per kilometer. So you say, I'm going to claim my mileage. If you're making calls from your personal cell phone that are business related, do you know you can claim that back from the business? Okay? So these are conversations you need to start thinking through. What is the smaller thing that I'm doing that can have an impact? No shilling is small. What impact does this have on reducing money? There's some people who work from home during COVID and have continued to do so, are saying, hang on, I'm paying Safaricom between 4,000 and 6,000 a month for data, for Wi-Fi. How can I push this to my business? The question that will arise is, are you going to invoice your business? That is where the disconnect will happen. Some people went all the way to Safaricom to ask them for a split of the bill. That process is very long, but if you're 4,000 shillings, you're paying for Wi-Fi or 6K, and then Safaricom says fine, 3,000 is going to your business, it comes out of the business income that you're earning. So I'm asking you to be innovative. I'm asking you to think outside the box to see how you can reduce your liabilities in a legally and supporting way. Okay?
I have a question.
Yeah.
Okay, nowadays, they say tax benefit. If you want to get tax benefit, you get an insurance or buy a property. So I want to ask you what other things what we can do to get tax benefit.
I think insurance and properties are going to give you a very minimum tax benefit, to be honest. But in terms of tax allowances, if they mostly benefit the large organizations. So the people who come in and pump in like 2 billion shillings, they can claim back 200% of that value through their tax return, which means they do not pay tax on that value that they have invested. This is really targeted to a lot of investors that come into the country. But when you're looking at businesses locally, there's few to none. There is something that they introduced last year for startups. If you start up less than 5 years, you can actually give your employees shares in the business. So before that was a taxable transaction, but now it's tax exempt. So you don't pay stamp duty, you don't pay capital gains tax on that, but those are very small nuances. I think for me, the tax benefits would be how you plan your taxes in terms of maximizing on your expenses as you declare your revenue. And look, the element of cash and invoicing will never go, at least for the next 3 or 4 years, but eventually it will. So as of now, you can still plan your business and say, this is what I want to receive in cash, this is what I'm going to declare. And that's what I've seen people do, especially with startups. Is that right? Absolutely not. So I can never advise you to do that, but for me it would be, if you're declaring your revenue X amount, how do you reduce your costs? Talk about the mileage claims, the entertainment, the client, well, calling them client dinners, could just be you and your family. Who knows, right? Your telephone costs that you can recharge to your business, small things that would impact your overall profits. But you must also think around, if I'm going to claim Safaricom working from home, and I'm working from a residential property, what about the licenses? I've also seen that coming in. So if you want to recharge, you better be in a place that has mixed use of building. And you have enough of those which are commercial building, and up there are apartments, down there are offices and whatnot. That's a mixed use building. And I think you talked about licenses and permits. That happens per county, so it's dependent on your number of employees, the type of business, but it's a very simple thing, again, online registration through Nairobi County website. You can do that and actually download a single business permit. Quick, easy to implement, but not everyone is doing that. Okay?
What about the ladies who work from home? They don't have a business permit for that.
And that's what I said, they would not have one.
Yeah.
But eventually, when they do decide that they need to sort of formalize their businesses, there's so many co-working spaces by there that are cheaper. You don't have to get an office that you pay rent every month on month. You can actually get into a co-working space, pay a day rent, but now you take a single business permit for that place, if required. But now if you like switching, it's very hard to go into a co-working space, it doesn't make sense. You'd rather do that from your home. But does that mean that you need a single business permit? Absolutely yes.
Yes.
Yeah? It does.
This lady is doing business. Her landlord gives her the receipt every month, only with his own personal PIN number, but he doesn't give ETR. He said, no, I don't.
So my landlord actually asked me for my PIN number and issues me with the items invoice, which is mandatory. And that for landlords, it's a different conversation because they are required to pay something called the monthly rental income tax. So that guy probably doesn't want to declare it, which is wrong. When you as tenants are supporting that, it all comes back to us. What is our impact onto the bigger picture? Do you want Revenue Authority to keep taxing the people that are registered because eventually you too will be registered? Or do you want to now make a change and be part of that and say, look, let everyone pay their fair share of taxes? you are paying someone money. Of course, for the services that they're providing you, why should they not pay their fair share? I'm saying fair share, not excessive, not undertaxed. So it's a mindset change.
Sandeep, I think we should
Yes,
wind up.
I am now winding up.
Yes, please.
So essentially, I think my last thing is really around the tax updates. Yeah.
One question. May I ask, for example, apart from the businesses that you have actually informed us, what I would inquire is, if I was selling a property for somebody as an agent, if I get a commission and they will not give me cash, for example, they just give me a check, the normal percentage is 3%. If there are 3 people, we have all shared. That money goes into the bank. Does it get taxed?
Yes, ideally they're meant to withhold tax. So commissions are subject to withholding tax. And then you are meant to now declare it, your share of your income. This is what you receive, less the withholding tax that they would have withheld, and then you pay tax on the difference.
So how does that procedure work?
So ideally, so if you get 3%, let's assume it's 100K.
Okay.
The overall guy would have withheld 3%, I mean 10% on the entire 100K. But now, how you guys will share, you could actually form maybe an LLP, because the credit will be in one person's pay, not all of you.
Yeah.
Yeah. So you have to agree that, look, if you're going to take advantage of the credit and I have to declare it, you will declare more income on your end, as I declare less, but they will also pay. So they will probably pay you their portion of the tax element as you pay it upstream. But if you have a formal LLP that you have registered, and you must think about it strategically, if you're doing this business with 3 people or more than one transaction, it only makes sense for you to form that limited liability partnership, so that you now go to market together. Whatever you earn is then coming through one pin for the LLP, even as you share it upstream. Or we can have a further conversation. I can guide you.
Thank you.
I want to ask a funny question. There is a saying that the topmost people, the billionaire, they hardly pay tax or almost no taxes, and the below than that, they are paying more taxes. So what is the catch behind it?
You have to be clever.
That I understand.
I think that and the guys who are billionaires really have also accumulated their wealth through time immemorial. And back then, taxes were not really a very important point. So people have gotten away with not paying tax for decades. Yeah. But today where we are, even people that are billionaires are required to pay equal amount of tax. And that's one of the principles of taxation, is equality. Alright, so that's what we always say when the housing levy was initially introduced, if you recall, everyone was paying a threshold of up to 5,000 shillings. So they went back and said there's no equality here. If someone earning 100,000 will still pay 5,000, but someone earning 1,000,000 shillings will still pay 5,000. There's no equality. So they removed the cap. It's a percentage basis. So even the person earning 1,000,000 shillings now pays 1.5% of the million bob, and someone earning 100K will pay 1.5% of the 100K. So one of the principles of taxation is that equality. Everyone should pay their fair share of tax. But what the billionaires have done in the past is accumulate the wealth, send it out of the country, and one of the key things I talked about, invest it. In property or liquid assets, but it was not done overnight. The only overnight billionaires are politicians.
Yes,
Yeah.
true.
That's because of corruption.
Yeah.
But everyone
And they
else,
get away with it.
well, they are, but you can see that even revenue authority does not spare you. Today you are in government. Like for example, I can tell you this because it's probably a bit public. The immediate former president is, most of his businesses are under immense scrutiny from the revenue authority. Okay, and no one wants to touch them with a 10-foot pole. They've gone around most of the big audit firms for assistance, but because it's a political thing anyway, but a lot of their businesses are under scrutiny on how they'll never pay tax. So I think it's catching up. It's a time thing, timing difference. Today you're not under scrutiny, tomorrow when you're not in power, it'll come to you. Politics plays a big role for the new billionaires. I think my last point is really just to keep up to date with tax changes, like now the social health shift that they call it, it's become mandatory. You should be migrating to that. Even people who are not employed are doing it, or who are not even running a business, so it must be migrated. There are a lot of nuances around that as well, in terms of what you've already paid, how is it going to be migrated. NHR was bankrupt, so I don't understand, even if you paid 1st of January 2024, if that number is going to be migrated, or you're going to have to start afresh. But the new one is very punitive. It's 2.75% of the gross salary of a person. So if you're not employed, it's good. I think the unemployed is very minimum that you still need to pay. Actually, it's even less than the previous one, but ones who are employed are going to be having it tough, and it's from the net pay. Yeah, and that brings me to the end of my presentation. I think I've done 1 hour 15 minutes.
Thank you so much, Sandeep. She will do the.
Thank you very much, Sandeep, for sharing your valuable expertise. I think it's going to be beneficial for all of us. And now, and we know that you charge between 350 to 600.
I will take it in
And
time.
we are very, very thankful to you that we are not charging.
No,
us,
it is a
but
weekend,
we
so
are
it's
going
fine.
to
Oh.
a lot of appreciation.
So we know when to call.
So I
Yes.
But it's some weekend in the
So we know when to call you.
Yeah, sure.
Saturday.
And you can always get me through Simran.
Oh yeah, my
Oh.
charge is applied, but you get through to me.
We give you a hug.
Now I
That's
invite
it.
Mr. Ravindra Singh Chana. Sorry. Sorry.
Ladies and gentlemen, good afternoon. Good morning, good afternoon. Just over, good afternoon. Sandeep, thank you very much for that very, very worthy advice on taxation. At the end of the day, if you're not a profit-making organization or a profit-making person, I think we are not right. You know, in our age, when we, old thinking, key tax the money. Why you want to pay tax this kind of year? You have gone wrong. Today, if you don't show taxes, even the banks don't think anything of you. When you go even for personal loans that I was talking about, they are not even going to talk to you. They will tell you, yeah, the guy only is making only 10,000 shillings profit a month. What do you want to deal with it? All right. If you're making 100,000 or 500,000 a month, then they'll say, oh, come and go, please, come talk to us. And at the end of the day, income tax, KRA are an integral part of us. We can dodge them. Do what you want. You ain't gonna get away. In another 2-3 years, when the system has been fully integrated, right?
Yeah.
I think even a purchase like a glass like this will be recorded. All right, it's going to become very, very difficult. It's not difficult. It's going to become very you're going to become public knowledge to KRA. It is actually that simple. I think Sandeep has put it out so well in an hour and 15-20 minutes. Yeah, and I'm just telling you the gist of it. It is important. Benji, thank you very much. Women Empowerment Group, and they've done a fantastic job. Keep it up. I will introduce you to a young lady in your next session, who is very good with SMEs, all right? And ladies who are looking for loans and things like that, you could probably talk to her. She's done up something so nice with the British Embassy. Yeah, through that fund, she's bringing up a lot of SMEs together. I think they'll be very helpful to you. Thank you for attending.
Thank you very much.
Can I add something? Sorry. I wanted to say it before, but let me just say, there's a new law in Kenya that is supporting people with disabilities, the businesses, right?
So as advocates through the Rotary Club that I work with, we're helping people to register as people with disabilities in Kenya. I think Kenya is the only one that actually is doing it in Africa. I don't see any other country that we're able to, PWD. So people who are with disabilities, when they register, they're tax exempted. One of the best benefits. So if there's somebody who needs those services, please get in touch with me. Our Rotary Club is happy to help out. And the other thing that when you were talking about the taxes, I was just thinking, because also for me, I do visas to Australia for now, that's my specialty, but one of the first documents that the Australian embassy or the Australian authority asks for is tax compliance certificate. Businesses tell us we have billions and billions in the bank, but it is of no use to us if you're not tax compliant. If you want to move abroad, but you on your company profile, you have not indicated that you're being paid a salary or your dividend, you pay dividends. So again, those are things that people need to understand, that tax compliance is very, very important. So if there's anything that we can assist with, let us know.
Thank you. Thank you very much.
We're going to present total of representation to Mr. Sandeep P.A. Mr. Trina.
Yes.
This is a conflict.
Thank you so much for your valuable time, and I'm sure you all enjoyed and learned a lot today.
Yes.
I wish this session could go on till evening because we have so many questions.
Yes,
Thank you so
absolutely.
much, and be prepared to call you again. Thank you so much.
Thank you so much.
Thank you very much.
Ladies, before you go, vote of thanks, please. Just a few minutes.
That was a very, very informative session, and I think we have all learned so much. From the 5 P's to record keeping to the cog of wheels to the items and everything. It was such an informative session. And Sandeep knows whenever I'm stuck with any tax-related issue, I give him a call and he sorts it out immediately. So thank you so much, Sandeep. That has been the most intense, kind of talk and presentation we had. It was very, very eye-opening for all of us. Thank you so much. Now, please bear with me. I have a lot of vote of thanks to give to a lot of people. Sandeep, number one, thank you so much. I think Chair and convener have really thanked you, but thank you once again. And then Ravi Uncle, we call him Ravi Uncle with love. So most of you must be wondering who the Women Empowerment Committee are. Some of you may think that we are part of Sikh Women Society, or that we're another group altogether, or that we've just formed 5 or 6 ladies and we're out there. We are actually a committee by Sikh Council of Kenya, mandated and formed by them to empower women within the community. Through Ravi Uncle's support and encouragement, we have done many, many events. Thank you, Ravi Uncle, so much, and thank you for gracing today. Thank you for gracing this event today, together with Pushpinda. Pushpinda is very integral in our community as well, and she's been a great support system. So to Sikh Council Kenya, thank you so much. I want to also thank you as the participants today. Without you, this event would have been impossible, and we owe this success to you. all of you sitting here today. Thank you so much. We ran the advert in our course in business group for 2 weeks, and the kind of feedback we were getting was so much. And in fact, people also asked for a link that we have sent to the people out of Nairobi to join in. So many women have joined in through our link. So thank you to also those who have joined in online. Thank you everybody for making this event a success. I have filled up a form there for any of the events that you want. Please pass it around because we need your feedback on how this event was and what you want from us in the future. So please fill in that and tell us what you want us, in the future. Our committee members, I want to thank each one and every one of you. I think in the beginning we were introduced. Without the committee members, I want to tell you something about us as committee members. We're about 8 of us, and usually we meet over a cup hosted by our convener Ratananti. How we eat and we really have a good laugh. We laugh and we have a lot of joy. But behind the laughter and joy, the seriousness, what goes on in planning these events. We sit, we meet, and we plan what our next event is going to be. And there's a lot of hard work that goes into processing all these events, putting it together, putting all the logistics and dynamics together. So to all the committee members, thank you so much for putting this together. And we also look forward to creating more events for each and every one of you. We want to encourage the women out there, we want to empower them. So please encourage even the other members to join in our events. I want to thank also Sodi. Sodi created the link for us for the members who could not join us. So Sodi, thank you for creating the link. An anonymous friend of Simran had given us the projector and the screen. We also want to extend our gratitude to them. So thank you so much, Simran. Please extend our gratitude to them. Yes, and ladies, thank you. I hope you enjoyed the session. Please do join us for future events. We are going to keep you posted. When you see me posting every morning on the KID group, it's not that I'm idle, I'm not idle, but it's because we want to empower women out there. And I really hope that we can make it bigger and better for all of you. Thank you so much.
Thank you.
Please have